It'd be simple to use. Put a screw tab on the bottom of it.
Good morning, everybody. My name is Joe Angell. I'm a CPA and partner at Angell and Company in Troy. My master's is in accounting, member of both the AICPA, MICPA, and my license is to practice actually in all 50 states, so I do practice nationally. It's my brother John
Angell, CPA as well. Been working with my brother, family business for over 35 years, and we're in the business of trying to save you guys as much tax dollars as possible.
And we deal with a ton of realtors, not just here in the state of Michigan, but nationwide. You guys ever heard of the group Core Training or Rick Ruby? Okay, so Rick's been a client of our firm since the middle 90s, and we've been traveling with the Core since their inception in 01. So we deal with a ton of realtors, a ton of mortgage professionals, not just here, but throughout the whole country. Let's get into this a little bit. As a realtor, the majority of you guys are paid on 1099. And the big thing is, are you maximizing all your business deductions? Okay. Pretty much anything that you can justify as a business expense, we can take it against your business income. Some of the more common ones.
Yeah, so the most common ones is, meals and entertainment, your cell phone, advertising, mailers, all that stuff that you guys have to do as realtors. Home office, I'm sure you guys have to work from home. Basically anything, like Joe was saying, anything that you can justify as business related, we can take a deduction of that, and that's a dollar for dollar deduction against your income. So we want to make sure you guys are picking up every expense you can get, because a lot of expenses go into you guys having to make your income. So that's the main thing. You don't want to pay tax, especially if you pay the actual business expenses out and you guys aren't taking those deductions.
Yeah, and I have a whole deduction checklist, which is industry specific for you guys that you can go through and just make sure you're capturing everything. If you're new to the business, old to the business, either way, a lot of people get confused, but you're taxed on your net number, right? So you get your gross 1099 minus all your expenses, and you're taxed on your net number. Okay, so all those deductions that we use bring it down to that net number that you're paying tax on. The more deductions, the merrier. We kind of know what's in line to. Like, I had $100,000 1099, but $300,000 in deductions. We're going to say no. It doesn't make sense. So kind of the segue on that net number, right? We got all of our deductions. That net number. Okay. Schedule C's, so you're reporting that 1099 and that activity on your personal return. Schedule C's and LLCs. Okay. That net number, ordinary income, you're paying tax on that. You're also paying an additional 15.3% of what's called self-employment tax on that net number. And that's for Schedule C's and LLCs. Okay. That same net number, gross income minus the expenses, we didn't do anything crazy, nothing too aggressive. That same net number in an S corporation or subchapter S, you're not paying any self-employment tax. No SE tax, so 15.3% off the net. There's some other requirements that you have to do in an S corporation that we'll get to in a second. Do you have a question?
Yeah, did you guys help set those?
Yeah, a little back, full-blown county tax firm, from bookkeeping to setting up your entities, tax planning, tax returns, payroll processing, you name it, we can handle it at our firm. Okay. So S corporation, no self-employment tax off that net number. Okay. What are the requirements to be in an S corporation?
First things first, with real estate in Michigan, you have to have your broker's license. So you guys would know that process better than me, but how do you get your broker's license to be an S corporation?
There's ways around it, a little grayer. If you don't have your broker's license, still doable. Keep that in mind. But truthfully, if you want to sleep really good at night, the broker's license can be an S
You have nothing to worry
corporation.
about. Another thing with S corporations, you have to be on wages, so it's like you technically work for that corporation. So with that self-employment tax that my brother was talking about, which is the Social Security and Medicare, the way that you pay that in on an S corporation is you have to pay yourself wages, you put yourself on W-2. So whatever your wages are, that's what you're paying in that Social Security and Medicare tax. With S corporation gives you the flexibility where you have to have reasonable compensation. So your W-2 is, it's going to be a much friendlier number than your entire bottom line compared if you're taxed on the LLC or as a sole proprietor. So you're only paying the Social Security and Medicare tax on whatever your W-2 amount is in comparison to the other entity structure where the entire bottom line is taxed on self-employment.
And again, it's a reasonable compensation. We work with you to come up with that number, issue a wage to the officer, stay in compliance. But maybe it's just a $10,000 or $20,000 wage to be in compliance. Maybe we're grossing up a wage to allow you guys to make a pre-tax deferral into maybe a solo 401k or a set plan, your dollar for dollar deduction. You basically take money out of this pocket, fund a plan, create a deduction at the same time. That makes a lot of sense for people in your industry. Okay.
Is that from the clerk or is it from?
It can be either or. It could be either or. That's correct. Yep. So LLC, Schedule C, S corporations, no self-employment tax. Backing up on Schedule C. So a lot of people, especially new to the industry, they haven't set up a business entity. They don't have a tax ID. It's all being recorded in their social security number. And you'll go and report that on Schedule C on your personal tax return. Okay? We know for the IRS that they love to look at Schedule Cs. Okay? It's a very highly audited item. You're basically saying, hey IRS, here's all my income, here's all my business expenses, all my miles, meals, travel, right here on my personal return. Go ahead and take a look. Okay? So even if you can't meet the S Corp requirements and you don't have your broker's license, our professional recommendation would be to remove that Schedule C off your personal return and set up a separate LLC. Okay, that would be step one, no brainer if you're not an S corporation.
If you have a partner.
What does that do? We'll kind of get into that. What does that do? It simply removes all that activity off your personal return. If we know the IRS is going there, why go there? Right? We can go over here. Yeah.
Is a sub-S requirement?
Yeah, sub-S and S corporation.
Sub-S, sub-chapter, S corporation, yes, same idea. Again, I've been doing this for over 15 years. I've seen people that don't have that broker's license. I've never seen it looked at once. It's a little gray. More of a regulation within your industry, state by state, than the IRS. So keep that in mind. Other states, you don't have to have your broker's license. Okay? So keep that in mind.
On the LLC, you don't need the Schedule C?
You remove that no Schedule C, now you're filing a separate LLC tax return, and what he said, we recommend forming a partnership LLC tax return. If you don't have a true partner, we'll make it maybe 99% you, 1% your spouse, 1% parent, someone that you trust. That 1% can be limited, so there's no tax effect to that individual. It just allows you to file that tax return. Another creative thing you can do within the LLC, so now you have a lot of these husband and wife teams, or like I know my wife helps with my business, right? So now you took this LLC, you still can take all those deductions. And another big thing with the tax reform for all of you guys, as you're a pass-through entity, is there's now an additional 20% deduction. And John's going to explain how that works.
Yeah,
so this is brand new 2018 tax reform for all pass-through entities. So even Schedule C, if you stayed there, this would still qualify for this.
Yeah.
And that is...
It's just a 20% deduction of your bottom line. So take that off when your return's all finished, whatever your bottom line's sitting at, they'll take another 20% off of that.
That's part of the new tax.
There's some regulations with how much income you make and stuff like that, but I don't want to get into that with you guys.
Certain things get
phased out. But
yes, sir.
That's what the C, the S, the LLC.
Correct. Pass-through entities. That's correct. So you got the major ones. You got Schedule C, which even can be a single member LLC. So you still have a tax ID
but you're filing on your personal return. So Schedule C, then you have an LLC that files a partnership return, and then you have a subchapter S corporation. Also new into play because of this reform are C corporations now. Before, the rule of thumb was a C corporation is dead. Okay, that's not the case anymore. You've heard it, the new corporate tax rate, right? It's 21%. Makes a lot of sense. It's a lot better than what I'm paying now. The key thing there, it's 21% of the net number, and then also 21% if you take out any distributions or you pay yourself. So all of a sudden, you're back up to the highest tax bracket. A C Corp will make sense, though, if you have an entity where you don't have to pull that money out of. You're accumulating money within that bank account. You're saving for a building. You're saving for this. Then a C corporation, because you don't have to pay the double taxation on distributions, you're only paying 21% off that net number. Okay? But just keep in mind, if you do want to pull that money out, you are going to have to pay tax again. So it's rare. It usually makes sense if you're looking to maybe sell a business in 3 to 4 to 5 years, or maybe you have an entity set up for some investment properties and you're buying properties and using those funds, maybe 1031 exchanges for other properties, it may make sense there. Okay. Another big one to keep in mind, I know I'm kind of throwing a lot at you guys. So the subchapter S corporation, this big S corp, big tax savings. Let's say right now, you guys had an existing tax ID. Okay. Hey, Joe, I set up an LLC, I set up a tax ID. We can right now today, February 28th, make a late S corp election, and we can have that LLC retro and be taxed for all of 2017 as an S corporation.
What's the deadline on that?
March 15th. That's key, because then all of a sudden you're like, oh, this is great plan for 2018, Joe, I love it. If you have a tax ID, we can go back retro and set up the S corporation now.
Can Keller Williams or any real estate, can they pay an LLC if you're not a broker? I didn't think they could. They can't.
They can't. However, and this goes back to kind of the trick I was alluding to. So they still pay you personally in your social security number, right?
Right.
So you pick that up on your personal return. Here's my $200,000 1099. Then down below you say reported on tax ID. You put your S corp tax ID minus $200,000. So in your return, out your return. Hey IRS, we're reporting it over here on the S corporation side. Okay. Do you see how we kind of like sidestep that a little bit?
Yeah. You get paid through the S corp, so you put that 200,000 comes down.
Yeah, well, yeah, that's back to the reasonable compensation and stuff like that. And ultimately, how this thing would look is you'd set up. I mean, you guys are business owners. You're self-employed business owners, right? So you have to look at this as a business. So we would go and we'd make our recommendation, set up a tax ID. You then would really take that ID and open up a business bank account with that deduction checklist that I kind of show you guys, and you'd want to run all those expenses out of that business bank account. If you didn't run the expenses out of the business bank account, I still pay them all personally, no big deal. We can still get them in there, but ultimately you'd want to run them out of that business bank account.
It's just more organized. Make sure you're not missing any expenses when it comes to tax time, having it,
Cleaner.
Your expense paid there. You can track your expenses better. It's all coming out of one spot. You'll know how your business is doing.
Yeah, so IRS doesn't like commingling funds. So you have personal funds, business funds, all these expenses. They'd like to see it clean. They're not going to disallow it though. If you had personal expenses that you paid for personally that were business expenses, and we took them over here, they're going to allow that. Yeah, you have a question?
Now, it was kind of mucked it up a little bit. In, was it 2025 when this current new tax code is up for
It'll probably get
elimination
abolished before that.
Yeah.
That'll probably be 4 years, so I'll spend the next 4 years trying to master this, and then come out with something, depending on who the president is. I mean, you guys know how it works. So let's say 2025.
Mm-hmm. So when that time comes up and say it lasts till 2025, and then it disappears, Now, I heard somebody say something, if you have an S corp, it's questionable if you want to go from S corp to a C corp.
Nope, you have that, you can S-elect a C corp, you can then go from an S back to a C corporation. What you can't do is you can't go from an LLC that you S-elected into an S corporation to a C corporation, because it was originally an LLC.
So if you make an LLC, you go to an S corp, then to a C.
You can't.
You can't. You have to go from an S to a C.
You'd have to go from a C to an S, and then even an S back to a C within a corporation. But what you're really doing with that whole late S corp election or an LLC, you're saying that the LLC will be taxed as an S corp just for tax purposes. It's still an LLC. That's a good thing to keep in mind too. So I have this LLC. I have my business bank account. I don't want to make all these changes. I have it all set up. If we S-elect it, same business name, same tax ID. You're just being treated as an S corp for tax purposes. Yep. That's a big thing there. So yeah, we talked about the deductions. We talked about the entity structure. Just going to touch base too with this tax reform. We mentioned the 20% deduction. Some other things that affect your industry, as you guys are out there selling. So you guys have probably heard that, you used to be able to deduct mortgage interest up to $1 million, another $100,000 on a HELOC. That's now down to $750,000, meaning you can take mortgage interest on debt up to $750,000.
New debt.
New debt.
So if you had a pass loan, it doesn't affect that. It's $750,000 in debt.
Okay. Another thing in your industry, real estate taxes now, they're capped out at $10,000. You guys have probably heard that before. You could always run as many real estate taxes as you had. That's now $10,000. My whole thing, and again, this is my opinion. I'm not a realtor. You guys are. This is your specialty. Those items, mortgage interest, real estate taxes, in my opinion, those are always kind of back burner reasons to buy a house. People are buying houses for what? Basements, a yard. I had a couple kids. I don't want to rent anymore. The fact that they could write that stuff off was always back burner. I don't think it's really going to affect you guys too much. They still get the write-off. There's not a lot of people that are over these thresholds. Okay? So, yeah, keep that in mind.
As far as business purposes of real estate, that stuff's all still fully deductible. Interest, property taxes, if you own rental properties or flip homes or anything like that, it's fully deductible. There's no cap on that.
Mm-hmm. Yes, ma'am.
Question on the business and personal account. How do you determine what you put in your business account? On your commission checks, how much you
Sure.
put each one and.
Yeah, I would go through with you the deduction checklist, and I'd say, hey, pay your car out of here, get a business debit card, meals, entertainment, maybe your car insurance, maybe your cell phone.
I mean, like the money that goes into it to pay that.
Yeah, well, that's what we would come up with. Here's my monthly
Okay.
bills on that, right?
Right.
So you would leave that right there in that business bank account to pay those expenses, and then whatever's left over, you can either leave it in the bank account or pull it out as a distribution. Yeah. So we'd sit down and say, okay, yeah, I'd like to see you, if you can afford to, pay all these expenses out of that business account. Yeah. What else, Chief, man?
That's it. You guys have any questions? Anything in particular? I mean, that's basically it. I mean, you kind of hit on it.
Yeah, I threw a lot at you, and I do get talking quick. So if you don't understand, feel free, ask me right now. Yeah.
What would be your general estimation as to what the cost variable would be to set up the LLC or an S corp or something like that?
We set them up in our office for $250, cheaper than any attorney in town.
And that's for the
Either of them, any business entity to set up, we can set those up for you. We can do all the S-election paperwork. If we have an existing tax ID, we can help with that too. Thing too to keep in mind, this is just my rule of thumb again, and John, a lot of our professionals can kind of get this. When does it make sense to be an S corporation? We know it doesn't make sense to be a Schedule C on your personal return, okay? The IRS is looking at it. So you opened up an LLC, you're working on your broker's license, whatever it may be. What number, what figure does it make sense to S-elect? My rule of thumb, once you're over 100,000 gross 1099 commission, it's a no-brainer to look to be set up as an S corporation. Underneath that, you might, just because you have to issue some wages, there's some other things that you have to do. Underneath 100 might not make sense. Over 100, it's a no-brainer. Huge savings.
You're saying we can go backwards though,
If you have an existing tax ID. If you have an existing tax ID and LLC, maybe it's just some LLC you set up, you're gonna do something with, you never did, guess what? Go back, we select it, we throw all that real estate activity over there, you're saving 15% off your net number.
What if we just set up that S corp in quarter one of this year?
It's gonna be for 2018. Yep.
Yeah,
No, and you have all the way, all going in 18. You can set up the S corp in September, October, November. It can still be treated retro for all of 2018.
So we're not in a rush to get the, make a decision today for the next quarter.
Well, unless you have an LLC right now.
Unless you have an
Right.
LLC, now that you haven't filed, and you're like,
Yes, you're.
you have to go retro. Yeah, exactly. So yeah, right.
When's the deadline to start up in S corp for 2018?
Really, if you think about it, well, you'd have to do it before the end of the year.
So third quarter.
Yeah, third, fourth quarter of 2018. If you have no existing tax ID or anything, but then same rules would apply if you do have a tax ID. You can make the late election in March 15th of 2019 or whatever. Yeah.
if you have a tax ID and you have used it in tax returns before.
Mm-hmm. You're still okay.
For a different type of business.
But I haven't used it.
That's fine. That's perfect. You have this. It's kind of just in limbo. You have this LLC set up. You don't know what you want to do with it. That would make sense. You would go and make a late S election and treat that LLC and run all your real estate activity over for 2017. Yep. But that has to be done by March 15th. That late election. Yeah. Yep.
Can you run multiple businesses through the same LLC?
No, I can tell you how they like to see it. Everyone has a different opinion, so it's like this. One activity in one entity. So if you got real estate, you're selling real estate, even if your wife's selling real estate too, you could run all that activity in one entity. But if you're selling real estate and your wife's selling insurance, separate businesses for that.
Let's say, let's say this is true. Okay, so I had an LLC for doing some consulting stuff. That slowed down. I'm really not doing anything right now. Can I use that same LLC and just say I changed businesses? Now I'm doing real estate?
No doubt. Definitely absolutely. It's been inactive for a couple of years. Now you want to use it.
Almost.
And you can also use this LLC and it's Joe and John's Construction. But now Joe and John's Construction wants to go do this. You can add a DBA to that and change it to now Joe and John's Real Estate Holdings or whatever it may be. Just add a DBA. We can do all that. Yep.
If I have two LLCs, one for my real estate business, and then the other LLC, every rental that I have, I use a separate LLC. So obviously the LLCs are not gonna generate 100,000 on those rentals.
Let me ask you.
Plus rental income's treated differently. You don't have to deal with self-employment tax with rental activity. So it's like it's almost like an S corp. Yeah.
Passive income.
That's right. That's how rental activity is treated. That's right.
All right.
And on that, you said you have multiple LLCs for each property.
Yep.
Are you then filing all those LLCs under one holding company? Or are you doing filing? You're paying state fee.
No, I think I have it underneath my real estate one.
Okay.
So in other words, I have a parent, like you're saying, I have a parent
holding
LLC,
company.
and then I have all the other ones underneath.
That makes sense. I like that because now you've limited each liability of those rental properties or properties separately.
Yes.
But if you didn't have the holding company, you could have one LLC for all rental activity, all flips, and just have separate, it's called a Schedule 8825, and you could report each of those activities under one LLC. They're all protected still by the LLC, but now you're not paying the state MAR fee of $25, $50 every year. You're not paying us to file 15 separate little LLC tax returns. It can be done all under one. Yeah. That's the cleanest way to do it. Yeah.
So Now, in saying that, the parent LLC, then I can't move that to an S corp
Not if it's doing rentals.
underneath it.
Yeah,
No,
that's
it's the
right.
parent corporate.
Yeah.
Parent LLC.
Unless you create a new LLC with all the other LLCs underneath it, took the old one and put the old one.
No,
Is your parent only doing rentals, or do you have your,
no, I'm doing my
Real
real
estate
estate
going through
underneath
that as
that
well.
too, yeah.
Well, off topic, in purchasing vehicles, do you recommend we purchase or lease vehicles?
That's a great question. Let me tell you, they actually asked that in my master's program because it was not a right answer. Okay, so I can tell you that, and from a tax perspective, here's how it works. If you lease your vehicle, you get to write off all your lease payments. So every lease payment that you pay is 100% deductible. Okay, if you buy your vehicle, you can't write off any of those payments, but now you place the vehicle into service and you take depreciation on the vehicle. The depreciation and the lease payments are about the same.
heavy vehicles, you're gonna get you can write off the entire thing though with the new. So if you get like a truck or something over 6,000 pounds,
Gross vehicle weight
Yeah.
over 6,000 pounds,
you'll get you can write it all off that year.
100% deductible, bonus depreciation. You win. It has to be a buy, okay, and it has to be new. If it's used, you can still get major write-offs, just not all of it. Just not all of it. But that's big because you're looking at, and I have a whole list of the vehicles that qualify, so something like the BMW X5, some other SUVs that are like nice SUVs, they qualify for this deduction. Yep.
So be careful with that because if you're someone who likes to move those vehicles a lot, if you take that depreciation all in 1 year and you go to trade it in or anything soon, you have to recapture all of that. That's income to you. So if you do take that depreciation, make sure you're kind of using it for a while so that you don't the very next year sell it and you have to claim the income on all that depreciation.
You use it like a 5 year or something like that.
That's how long it gets depreciated over. But with the special depreciation on the heavy vehicles, you're getting it all in the first year.
Forward, but you still want a 5 year schedule.
There you go. You just lose depreciation at the end because you upside it. Yeah.
If you didn't do it the year before, can you do it 2 years?
You can place the vehicle into service. You lose some of that bonus depreciation, but there's still stuff that you can do. Yeah.
If you're taking your car payment and insurance and that stuff, do you also get to do mileage, or do you have to pick one or the other? Okay.
One or the other, and we weigh in. I ask for both pieces of information. Give me your miles. So it's a standard mileage deduction at what's the current rate? 53.5 cents versus actual payments, lease payments, gas, maintenance, that kind of stuff. We weigh it.
53.5 to 17.54 is 18.
Yeah.
Doing 17 tax returns right now,
Well, we're doing 17 tax returns in 18
right now.
and then trying to figure out 2019. So we're all screwed.
So the big struggle we deal with is we're doing 17 returns. People come and see their stuff, and then they're asking us about the new law
That they
affecting
just
their
heard
17
about.
stuff, and I try to explain, and they don't care, and it's fun.
Yeah.
Years in the headlights.
Well, and someone told me when I first started, the accounting works great, certified public accounting. The accounting works great, it's the public that sucks.
Not you guys seem great.
For now.
Work with a ton
For
of
now.
Realtors are great.
Realtors are great.
Realtors are like, I'm a salesperson. I'm not very good at this kind of stuff. So I'm going to defer to you, and you're going to help me set this up and save me some money while I focus on building my team and building,
That's the best
the
case
sales
scenario.
side of it.
Because you guys listen, there's a reason you come to us, there's a reason you pay us. So we're going to give you our knowledge, and if you listen to us, we're going to give you good ideas. Just like when I go buy a house, I'm looking to you guys. I listen to what you guys tell me. I accept it, and I go with your, because this is what you do. See, we have clients that come in, they ask us questions, we tell them what to do, then they do their own thing. And then it goes wrong, and then they look to us like, what the heck? And it's like, I told you to do something else.
I love realtors and I love doctors because doctors are like, you don't go to your doctor and say, hey, why don't you perform this procedure like this, right? So they don't tell me how to do my job. Those are my favorite clients. I hope I don't offend anybody. I will, whatever. Engineers are my least favorite. They actually, they'll question the tax code. They'll go line for line. I've had them say, are you sure your software's right? It's like, okay.
I wish I could just say, go do your own return.
Yeah.
But yeah, no, that's what's fun about public accounting is we're dealing with every single type of business and personality out there. So it keeps it interesting.
Yeah.
So if you want to make an appointment, would it be with one of you guys or?
Yeah, it'd be
do we
one-
tell them that we're a realtor, so we go to somebody?
You just ask for me or John or both of us.
Okay.
I have 22 employees, 7 CPAs, but not one of those files leave our office without my view, his view, or my father's view, who started our firm 40 years ago. You always, we'll be your contact. Yeah, there might be someone that helps me load your numbers, but eventually it comes to my desk. Yeah. On that too, I was thinking, how are you guys set up right now with your tax payments? Are you guys making quarterlies? Are you not making quarterlies? I know. So I can tell you right now, they're a no-brainer. You should try to make your quarterlies. There's payments for underpayment of estimated tax. So because they didn't give their money throughout the year, you have to pay them a penalty that there's very little that we can do to get away from it. So if you're set up on quarterlies, you should make it. Perfect realtor setup in my book would be an S corporation, right? A portion of your earnings on wages where you're paying in some payroll taxes. The rest of it set up on quarterly tax payments throughout the year. We find that sweet spot where that wage amount makes sense. You don't want to pay too many in payroll taxes, but there's an amount that makes sense along with the combination of the quarterlies. That's the best way for you guys to be set up in your industry. $1 million guys, $100,000 guys, that's really how the plan was.
What is their estimated, we'll call it quarterly marker? Is like, give or take 5,000, give or take 10,000.
Meaning, I don't
on the IRS side, when they're asking for a quarterly, if you're off,
they want your quarterlies to be calculated properly.
okay.
So
if there's no great fudge.
Yeah, they want
there's
it
not,
typically
it's,
over
it's,
the year.
Finance numbers.
Yeah, it's based on two. It's based on your tax liability in the prior year. It's based on your earnings in the current year. There is, again, you can't tell I'm a little more aggressive. I'm younger. I like to look for loopholes. There's a form called a 2210, and you can allocate some of your income. Say I made no quarterlies, Joe. I had a monster year. You're looking at a $5,000 penalty. Maybe we allocate the majority of your income into the final quarter, right? Where we can say, maybe you got all your commissions paid in the final quarter, whether you're not, I don't know. But maybe we say that, right? And then we just say we didn't pay any penalties throughout the year. We told them the earnings here in the fourth quarter. Just to track it. Yeah. Again, a little more aggressive. Yeah. Yeah. So, each tax situation is different. Jessica and Justin have been longtime clients of mine. So for you guys, we can offer a full complimentary review, your tax situation, give me your last filed tax return, your current situation, give you a review, make some notes, get you on the phone, a conference call, and kind of give you, our recommendation.
So we should call the office and set up an appointment.
That'd be great.
Yeah.
I'd love to help you guys out. Yeah. Any other questions?
On the quarterly, that's quarterly. You said if you set it up that way, is there another way of saying that?
No, it's you'd want to the plan would be a portion on W-2 wages, a portion on quarterly estimated tax payments. You're required, if you're earning money and not paying taxes throughout the year, to pay quarterlies. There's no way around it. Like I said, you can push some income into different quarters to avoid some of the penalties, but you have to make quarterlies if you're making money and not paying taxes.
You have to send in either 90%, like when your tax return's all done, if you sent in 90% of what your current liability is over the year, or 100% of last year's liability, and then when you're above 150, it's 100% of your current year and 110% of your last year's liability. So whatever you send in over the year, that's how they calculate it against what your final tax return is done against. So, my best thing is I don't like to send the IRS like more money than I need to, because, I'd rather keep it in my pocket, put it in the market, do other stuff with it. So I always set them up for just putting in the minimum amount to match what their last year's tax was. So just send that in over the year. You won't have any penalties, and then see what you can do at the end of the year and see if that liability will get down.
Yeah. Do you suggest then, like, in November, December review
Well,
where you're at?
You actually read my mind. So that's what we do for every single one of our clients, we do year-end tax projections. So I start reaching out in October, November. Justin and Jessica came in, we sat down, here's where they stand year to date. Okay, let's hold off and not make that quarterly. Or no, we're gonna have to adjust that quarterly up. Really, I talked to a lot of my clients throughout the year. Every quarter we'll get on the phone, hey, I had a monster quarter. Okay, let me send you over some new coupons. Or, hey, Joe, it's really down. Let's not pay that quarterly then. Let's get it going in the next quarter.
And every client's different. We have clients that want they want to just pay it throughout the year and be done. They don't want any surprises at the end of the year. I have other clients that just want to pay the minimum so they have no penalties, and at the end of the year, let's see what we can do.
And
So it depends.
I have clients too it's your money, right? You've earned the money. They've looked at it and they said, you know what? I can make more money with my money than giving it to the IRS. So I'm going to calculate my penalty and it's going to equal this. Well, guess what? The Dow did what? 23% last year? So, it made more sense to invest in the market than pay the IRS last year. Every year is not like that, but I do have clients like that too. Yep. Cool. Anything else? Cool.
Awesome.
Yeah.
Thank
No
you.
pleasure. Really appreciate it. Again, any questions, feel free to reach out and take a look at your tax returns, and we'll go from there. Cool.
Thank you very much.
Yeah.
Appreciate it.
You guys all